Hello and welcome back to Explain the Charts. Today is November 6th, 2025, and we are taking an in-depth look at the QQQ, the ETF that tracks the Nasdaq 100 index. We've got a lot to cover, from breaking news about AI valuation fears to a detailed technical breakdown of the price action. Let's start by looking at the bigger picture with the daily chart. First, let's address the news driving the market narrative. There's a lot of conflicting information right now, creating significant uncertainty. Just yesterday, headlines from outlets like CNBC TV18 reported the Nasdaq tanking over fears that AI stock valuations are getting too high. This suggests a wave of bearish sentiment is taking hold, spooking investors who have been riding the AI wave. However, just a few days prior, the story was one of AI optimism, with massive deals involving Amazon, OpenAI, and Nvidia pushing the Nasdaq higher while the broader market lagged. This divergence shows a clear battle between long-term growth narratives and short-term valuation concerns. Underlying this are some worrying economic signals. The U.S. manufacturing sector has contracted for the 8th straight month, and Fed officials remain hesitant to commit to rate cuts due to persistent inflation. This creates a tough environment for growth-oriented tech stocks, which are sensitive to interest rates and economic health. A TransUnion report also points to a K-shaped economy, where high-income consumers are thriving but subprime borrowers are at increasing risk, adding another layer of potential instability. Now let's see how this news landscape translates to the price action on our daily chart. As you can see, QQQ has been in a powerful uptrend for most of the past year, culminating in a fresh all-time high just last week, up around the $637 mark. This long-term bullish structure has been impressive, driven largely by the AI narrative we just discussed. However, in the last few days, we've seen a sharp pullback from those highs. This recent drop aligns perfectly with the news of a market sell-off triggered by concerns over lofty AI valuations. The question for us as traders is whether this is just a healthy correction or the start of a more significant downtrend. The first key level of support to watch is the zone between $618 and $615. This area represents a prior consolidation zone and is the first major test for the bulls. If we break below that, the next critical support level comes into play around $589, which was the low from the significant sell-off on October 10th. A break of $589 would be a very bearish signal and would suggest a major trend reversal is underway. On the upside, immediate resistance is now the breakdown area around $630, followed by the all-time high near $637. Bulls need to see price reclaim $630 with conviction to regain control. Let's zoom in on this recent action by switching to the 1-hour chart, focusing on the last few trading sessions. Here we can see the anatomy of the recent drop much more clearly. Notice the sharp, high-volume decline on November 4th, where the price plunged from around $632 all the way down to a low of $618. This was a very aggressive move, indicating strong selling pressure. Since hitting that low, we've seen a bit of a bounce, with the price currently hovering around $623. This bounce is currently facing its first test of resistance. The area around $626, where the price consolidated before the final leg down, is the first hurdle for any potential recovery. If the price fails to break above this level, it could be a sign that sellers are still in control and another move down is likely. The low of $618 is now the definitive short-term support. A break below it would almost certainly lead to a test of the lower 600s. For an even closer look, let's switch to the 15-minute chart to analyze the intraday sentiment. On this time frame, we can see the battle between buyers and sellers in real time. The bounce off the 618 lows on November 5th had some initial strength, but we can see it is starting to stall. Volume during this recent push-up has been decent, but not as strong as the volume we saw during the sell-off, which is something to be cautious about. Short-term traders should watch for the development of a bearish pattern, like a lower high below the 626 resistance level. This would be a prime opportunity for shorts targeting the 618 low. Conversely, if buyers can push through the 626 level with strong volume, it would signal a potential short-term bottom is in, and a move back towards 630 could be next. The price action right now is very tactical. So, to recap everything and look ahead, let's return to our daily chart. The market is at a critical inflection point, caught between a powerful long-term uptrend and a sharp, news-driven correction. Let's outline the scenarios. The bullish case, which I'd give a 40% probability, is that this is a necessary cooldown. In this scenario, QQQ finds solid support at the $618 level, consolidates, and eventually breaks back above 630, signaling a continuation of the uptrend toward new highs. This would be reinforced if we get some positive economic data or reassuring earnings reports from key tech companies. The bearish case, which I see as slightly more likely at 50% probability, is that the AI valuation fears trigger a deeper correction. This would involve a failure to reclaim 626, a break below the 618 support, and a subsequent move down to test the critical $589 level. Continued negative headlines or a hawkish Fed would increase the chances of this outcome. There is also a 10% chance we simply chop sideways between 618 and 630 as the market digests these conflicting forces. The key price levels to have on your radar are resistance at 630 and 637, and support at 618 and, most importantly, 589. Keep a close eye on trading volume. A spike in volume on a break of any of these levels will give you a stronger confirmation of the market's next intended direction. That's our analysis for today. Please remember, this is for informational and educational purposes only and is not financial advice. The markets are complex, and you should always conduct your own research and due diligence before making any investment decisions. Thanks for watching Explain the Charts, and we'll see you next time.